Okay, welcome back, everybody. This is the weekend video, and here, um, I feel like there's some explanations needed, but you all well know at this stage why the upset that has been caused over the last couple of weeks. But suffice to say, somebody hacked the damn website and sent me into a tailspin. So we're back. Oh, thank God. And let's get into this weekend video. Okay, I think we'll do the usual, start on the 4 hour and move down into the hourly. 4 hour for the medium term trend and hourly for the short term. So, got my bottle of water with me today, so I won't start sounding like Barry White hopefully after 10 minutes. I'm still working on either we have a further, I have shown here wave 1 and wave 2 in blue, leading diagonal and some sort of double combination. There's a possibility that we have another leading diagonal and a simple zigzag. I've been kind of running with the idea that this is kind of a running flat wave 2 here. See, 3 waves up, 3 waves down, and then 5 waves into complete wave C of 2, and then 5 waves down and 3 waves up again, and the kind of laboured action off that low counts as a correction, and then we'd have a nice spike lower again this week. So far so good. In terms of the medium term trend, still facing down. We're still looking at the possibility of an acceleration into a third wave down. The only caveat, or the only alternate on this right now, is that we have a larger wave 2 somehow still underway, and that's shown here, with maybe an A B wave maybe into that previous low there, 111.75, and then maybe some sort of C wave developing now. But yeah, it's hard to read that given this kind of crawl to the upside recently and then the spike lower, so we're still kind of orientated to the downside again. The immediate let's say invalidation point for this particular wave count would be 114.50. So if that 114.50 breaks, then we'd switch to that larger wave 2 idea. But for now, we have the possibility of a third of a third of a third of a third coming along, so we should probably prepare for that. This week, it looks like, well, today we've got it's 10 to 10 here in the morning, so whatever kind of light trading is going to happen today, there won't be any institutional trading at all. Excuse me, I've got a bit of a cold as well. It looks like there's kind of a drift to the upside after that spike lower yesterday, so it could be some sort of internal fourth wave within this wave 1. So on Monday I would look for a further decline in as part of this 5 wave pattern to complete 5 waves down in wave 1, and in the short term I want to see that 113.24 level hold. So as this wave count progresses, as we've got lower degree and lower degree second waves complete, we now go for the lowest degree second wave, and if we get a 3 wave correction into a kind of a further lower high, which it's always possible, at about 112.50 or 112.60 or so, then you've got a pretty tight kind of margin for error there, 113.24, 112.60. And you would work to kind of enter a trade to the downside in a third of 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 a third, how many thirds there are. And again, I would like to see a break of that support in this wave 1 down, but we'll see whether that happens or not. So next week, let's see if we complete this lower degree impulse wave and accelerate lower into wave 3 of 3. So pound dollar I introduced another possible for wave 4 this week, but that got broken yesterday. There was a way of fitting that into action into a triangle. it's hard to fit that into anything, to be quite honest. And this 4-hour count seems to be pretty much ruled out now. So I think we've got our wave. I didn't update this, so I should update this now. Forgive my tardiness. So we may well have that C wave ending diagonal complete at that recent high. That would be 133.80 or so, and we should be working on a wave 1 down right now. And if that's the case, well then, if eurodollar is about to turn over and accelerate lower, well then there's every possibility that cable's going to do that too. Okay, so let's get to the hourly chart. So we've got, the only way I can count this in any impulsive fashion to the downside would be some sort of a wedge pattern, like a leading diagonal pattern, with very convoluted corrections in the mix there. So it's a stretch. I know it's a stretch, but we haven't had any counteracting action to the upside either. So I'm going to have to go with the idea that we're spilling lower into a third wave. We've kept lower highs the whole way down. This could be some sort of a wedge there. Wave 1, 3-wave pattern in wave 2, so that's suggestive, alright, of a second wave. 5 waves down again, possible 3 waves up in wave 2 again, and then further action to the downside. Now, it has not been convincing, I'll grant you that, and hence the reason why I'm still a little bit hesitant on this bearish count, but I still think if we have these previous highs, if these previous wave 2s continue to hold, 131.33 being the most immediate one, maybe even if we look for this downward sloping trend line to hold in any sort of a reaction, well then we're still looking at a third wave down. There's a previous wave 2 as part of that wedge pattern. If we got a break of that wave 2, that's 127.72. I think you pretty much confirm it at that stage, especially if it's more impulsive in nature, that decline. So next week, we'd still like to see that downward slope. First of all, I'd like to see an acceleration lower, a nice, it's hard to call it a positive move, but a nice, let's say, impulsive move to the downside to start ruling out these alternate counts here, and to get into the groove of a third wave down. Okay, so opposite picture here on dollar yen. We've been holding up near the highs, which is quite positive. Still the possibility that we have a larger second wave here developing. I'll get into that in a second, but for the moment we could still be working on that 1-2-1-2, pretty clear, decent 3-wave pattern there. We did not. Here's a substantial caveat with this second wave here. The second wave low there, 109.60 or so. We didn't get a break of this wave 1 high, so there is a world where you could label this as wave 1, 2, 3, 4, and then 5, and then a larger correction back into that kind of 109 area again. But we'll see. We'll deal with that if that looks more likely, but I'm not particularly convinced by that either yet. We can put that as one of the alternates. But for now, I'm going to stick with this 1-2, 1-2, and a possible developing third wave up, as this will be wave 1 of 3 to the upside. Or wave 1 and 2, and maybe wave 3 already beginning. Okay, dollar yen. Here we are, the hourly chart. Again, just like on the 4-hour chart, we didn't get, with this low here, we didn't get a break of that previous wave 1 low, so we could be talking about 1, 2, 3, 4, 5 up to wave 1 here. And if we see a larger fall back down to that interim support there, 110.84, that's what we'll go with. We would switch to that type of alternate account there. But for now, given the meager nature, or the kind of unconvincing nature of the declines, it looks like a smaller degree correction is underway, and that would fit a wave 2 in pink. I would allow for a fall down to that 114.40 area in a kind of a larger flat pattern. So that'd be 3 down, some sort of a 3 up correction, and then 5 waves down into this rising trend line again. So you could have wave 2 complete at the low. That's less likely. I think we'll probably have another dip down into that trend line again. And if we keep correcting back towards previous support, then we'll probably switch that alternate account there, and then work on wave 3 up again after that. But there is a distinct possibility that next week we'll see an acceleration higher begin in third of a third wave up in dollar yen. So that's something to watch out for, especially if we get a nice impulsive break of that 112.16 level there at the previous wave 1 high. Excuse me, I'm going to have to take a drink. Yeah, so on the lookout for another rally in dollar yen. Let's get into the stock market. We're well along towards the end of this count now. Excuse me. And there's no reason to believe that we won't break to a new all-time high as wave 5 here completes. So that'll be wave 5 of 5 of 5. And wave 3 and 4, you could take, that's the August highs there, or sorry, October highs. You could take wave 3 at that October high, or you could take wave 3 at the previous February high, or late January high last year. It's kind of 6 and 1, half a dozen the other there, really. But for the moment, it looks like we've got 5 waves up on the cards there for 1, 2, 3, 4, 5, 4 wave 5. And we should watch out for a final new all-time high, and then excuse me, a breakdown to begin either wave C down or wave 1 of the next long-term bear market. And you might say that I've been expecting that for too long now and it hasn't happened. But in my mind, all we're doing is cycling through specific scenarios until the one actually clicks and we're gone. You don't want to wait that long, to be honest. Okay, so the hourly chart. This is subject to change, obviously. There's a lot of, let's say, possibilities as we go forward, but I think we've got an upper limit on this rally now. We have wave 1 of 5 complete. We have wave 2 of 5 most likely complete. And we're working on wave 3 up. The target for wave 3 of 5 is up around 27,128. So that'll bring us to a new all-time high, and that's where wave, if we get a line there, that's where wave 1, excuse me, and wave 3 would reach equality, and then we'd have a smaller degree, or just a smaller rally again to the upper 27s to bring us out to wave 5. Wish this thing would work for me. Excuse me. So 27,128 would be the kind of target area for wave 3 to complete, and then you could extend that higher and say the 162% extension, and that would give you a level up at 27,700, so the upper 27s to complete altogether for wave 5. And this is a similar type of, extrapolation that I'm doing in the S&P right now as well. Not quite sure we get there, to be quite honest, because of the general deterioration in the internal action right now. But anything is possible when the bit is between the teeth of the market, and it seems to be right now. There's nothing that seems to be stopping them. No these bells that keep ringing, these warning signals that keep popping up whether it be industrial production, whether it be the employment figures, whether it be general kind of cyclical downturn in corporate profits, whether it's just the late term or how late we are within this current cycle, history in general. Nothing seems to be stopping these people from bidding ever higher prices for ever lower quality securities. It's astounding to me that people will bid up a security even though that very security is incredibly compromised right now. Leverage alone, within the corporate sector is just beyond even belief at this stage. And if you were to look clinically at it, you would not touch any of these securities within a barge pole. But anyway, that's just me. I've been too damn bearish for too damn long, according to most. So, let's see how this third wave unfolds. So, whether you take, let's get in there a little bit. Whether you take this high as wave 1 or that previous high as wave 1, it looks like we have another second wave complete, and the move up on Friday is most likely wave 3 of 3 of 3. Excuse me. And if we see a deterioration, let's say directly after or in the area, let's say if we pop to a new all-time high and we see an impulse of deterioration immediately, well then I will just call that wave 5, and we start breaking down again back below that 26,000 level again. Then I think we're done. But we're so far along the kind of conveyor belt now to doom that it's all we're doing is just playing out a tune until the near time end, which shouldn't be any more than, let's say, the end of, depending on how quickly wave 3 completes. Wave 3 should definitely be complete. I wouldn't give it any more than the next 10 days or so. And wave 4 and 5, then another maybe, 10 days, 14 days, so maybe 3 weeks to complete this final cycle up before we finally cycle down again. Okay, outlook for next week is still, let's see if we can complete this third wave up over the next week or so. And you want to see that 26,303 hold. Alright, let's move on to gold. My brother gold, the breaker of my heart. We're still working within that second wave. We're looking at a double combination now. 3 waves down in A, 3 waves, some sort of 3-wave pattern in B, corrective anyway to the upside, and then 3 waves down again in wave C. We've got this trend channel going on. We broke through that previous left shoulder there of support at about 1277 this week. And then we're moving down into the lower kind of 1250 range for the 50% retracement, then in wave 2, and then we work up in wave 3 again. So wave 2 is again extending lower, so it is what it is. You just got to work with it. it looks like on Friday we began this. Here's this wave, larger wave 2 there. So we've got A, B, and then 3 waves again down in C. Most people would label that X, Y, and Z, but I just don't like those letters, hey? So it looks like we've got a final zigzag here, completing in wave C of 2. And I'm just going to get a drink. Excuse me. But we've got 1, 2, an extension there, 1, 2, 3, 4, 5 in wave 3, and some sort of fourth wave undergoing now. So 4 and 5 should complete early next week. Should be, maybe even by Monday evening, we'll see this complete. But most definitely by the middle of next week, and then we can work up again to start taking out these previous interim highs as we move up into the larger wave 3. So near term, we just got corrections to complete, and then we have to move up again impulsively. So gold, medium, long term upwards. The near term, we've just got to finish this further 3-wave pattern here. Okay. Crude oil, we're kind of teetering out here, so we are, aren't we? Or petering out, let's say, at that 62% retracement level of the wave 1 decline. So wave 2 is reaching its inevitable end, however you label that internal pattern there. We're kind of sputtering at the top here, it seems. Still got a pretty decent 3-wave pattern up with this kind of running flat wave B internally there. Then you could label this a clear 5-wave pattern also, but this ending pattern here is going to be 5 waves, whichever way, if you're going to take the ending diagonal route, or if you're going to take the simple 5-wave route. Excuse me. So wave 2 is ending. There's wave 2. And each decline I'm taking with the possibility that it could be the impulse wave lower that I'm looking for. So it's still experimental at this stage, but we'll see how this works out. So if this was going to be either wave 5, let's see. No, that's wrong. Delete. If this was either going to be the normal 5-wave pattern up rather than the ending diagonal that I'm labeling, then this final move would still be a 5-wave pattern. So we're still looking for the same, let's say, ending scenario, whichever way you look at it. And we've got 1, 2, possible 3rd wave. This move within the channel is viewed as wave 4, and then a pop to the upside, and possibly a failed 5th wave because we came in slightly lower than that 64.74 high. Unless we get an extension higher in that 5th wave, but for the moment it's this again, just like the stock market. This is so long in the tooth here now. This rally that there ain't going to be much more upside here. We've had all the upside that you're going to get, and of course everybody's as bullish as you can be right now, even though we're at lower highs. So wave 2, looking for the completion of wave 2 with a signal to the downside. So let's see if that happens next week. I have the 4-hour chart labeled as well. I should do that. I will do that early. I'll do it over the weekend. Get it up early next week. But we've got a 5th wave unfolding and closing out. I think we're further along in the S&P in the pattern than in the Dow. I don't know why that is, particularly maybe people are shifting away from kind of what they might see as more kind of stable long-term securities. Maybe that's a general resultant of the, let's say, the shift to negative social mood that's kind of underlying this general trend change again. But that'll all play out eventually pretty soon. If the SP is going to top out, the Dow is going to top out. They're all going to top out. It doesn't really matter. What you actually put your money in, it's all going down at the end. Okay. Very fitting language for Good Friday, don't you think? All right. Wave 5 of 5 of 5 of 5 of 5. Could you put that in your pipe and smoke it? Here we have a 5-wave pattern unfolding again in wave 5 in blue, and that's the kind of important wave at this point, is this 5th wave in blue. So we've got wave 1 here, that's completed on the 19th or 20th of March. We had an expanded flat wave 2, we had wave 1, 2, 3, 4, 5 up in wave 3. We reached equality, you can see right there, with the Fibonacci extension here. That's the wave 1 height. We reached just pipped right up to equality with wave 1 at wave 3, and then we corrected lower. Now this could just be wave A of 4, depending on how wave 4 unfolds, but we're going to take it as wave 4 complete, and we may be moving up into wave 5 now. So that'll be a further 5-wave pattern to new all-time high. So that's the previous all-time high there, 29.41. We should break that pretty easily. I'm looking at a target range there. Let's get that up a bit. 800. So the wave 3 high, 3 waves down, possible wave 4 done. And if we're moving higher in wave 5 of 5, then we should see 5-wave pattern unfold from there and break to a new high. We've got the wave 1 extension from wave 4, so if wave 5 equals wave 1, then you'll have wave 1 and wave 3 equal, and then wave 1 and wave 5 equal, all reaching equality together. I think that's less likely, to be honest. I think we'll top out before that 3017 level there. Excuse me, my throat is just... I think we'll top out before that, because I don't see the 3 waves reaching equality, to be honest. You might look back on this video and say, hey, you were proved wrong, but I'm proved wrong every day of my life. So that's not going to change anything there. Anyone who's an adult will join me on that sentiment. Okay. So if wave 1 and wave 3 are complete, we're looking at a projection here of the 162 or 161.8% projection of wave 1 from the wave 2 low. So the wave 2 low will be down here somewhere, and that gives us a price of 29.96, just below the 3,000 level. 29.96. Will that give us the final high for the S&P? The question will be answered soon enough. If we break out to a new high at all, if we break out to a new high above 29.41, that would be done for me anyway. So let's see how the next week unfolds. There's no reason to believe that we won't break out to a new high next week. And the party will begin at the end, for the financial media anyway, and expect to see plenty of tweets from our good friend. I won't mention. Plenty of tweets, plenty of backslapping, plenty of hats printed, S&P 3000, all that. But anyway, suffice to say, I think it's a 5th wave up, and you ain't going to see this for very long. Okay, let's move on to silver. I do hope I'm recording this now. I'm not going to have to go over it again. My voice won't sustain it. Okay, so silver, again, much like... let's get the 4-hour chart there. Boyo. Silver, much like gold, I think this is actually unfolding in a zigzag. And we'll most likely have one final low within wave 5 of wave C. And then we should head up in wave 3. And actually, the wave count in the metals is pointing to a final high in the equity markets. So one final low for the metals, one final high for the equity markets, and then you can, kiss it goodbye. Okay. Here is this zigzag pattern: 1, 2, 3, 4, 5. A little blip to a new low in wave A. 3-wave correction, wave B. That was an interesting one. Triangle wave B there. And then 1, 2, 3, extension lower in wave 3. Some sort of 3-wave pattern, wave 4. That's probably a zigzag as well. A, B, C, wave 4, and then move lower into wave 5. You see we've got 1, 2, wave 3 done. Possible triangle here of A, B, C, D, E. We've kind of come to a bullet point here, so we have, and we should drop next week in wave 5. You could also view this as a larger wave 4. You could call that wave 3 low there, wave A, B, C, D, E. So a kind of a real grinding fourth wave triangle there. Either way you look at that, it's still a correction ongoing with a completion needed to this larger pattern. So we've got, let's say, 4 of 5 waves done. One final little blip lower into that 1450 area. We've got a support 1450 there. Let's see, have we got a 50% retracement there? 61.8 comes in at 1480. So we'll see how that plays out. Let's say 1484, that's 1480, that's a 62% retracement there. So anywhere between that 1480, upper 1450s should close out for silver, 3-wave pattern, and then we should move higher pretty quickly. Okay, so let's get into the treasury market. We were looking for a high, wave 2. We've got an impulse pattern, most likely a completing double impulse pattern here. So a series of 1-2s now off that high, and we'll be looking for an acceleration lower. Take out that wave B there at 121 over the next week or so. So we've got maybe 1-2 unfolding wave 3 now. There's that 1-2 off the high. A nice 5 waves down in wave 1 again. Maybe this wave 2 ain't complete just yet. We might see it price tackle that wave 1 low again. We could have a little triangle there. Maybe it's in 3 waves up in a B wave triangle, and maybe we'll move higher in wave C. You could also say very legitimately that this wave 2 is complete, but we should know by early by Tuesday anyway, whether this wave 2 is done or not, and then we should move down into a third of a third wave lower. Okay, so next week is continuing downside, and treasuries have topped out again. I don't think we will see, in the longer term securities anyways, I don't think we will see any threatening of these recent highs again. I think the cycle for interest rates and for government securities again has topped out, and we should start heading in the other direction, which should worry governments a lot. It will. They ain't worried now, but they're going to be worried over the next couple of years when they can't fund anything. Okay, I think that closes it out. That's the 9 markets done. I might have a quick look at Bitcoin. I introduced this Bitcoin count there recently. I know some of you guys do trade Bitcoin. I was looking for a 4th wave here. This is the daily chart here from the all-time high there. Back, when was that now? January last year? Oh, December 17. So we had 3 waves down in wave A. I think we had a long, during 2018, we had a long contraction triangle tracing out, and then in towards September, then we had a breakdown again in 5 waves, and I don't think that 5-wave pattern is complete again. And I think there's no reason why we shouldn't tackle those let's say at least below 1,000 anyway. I don't think there's no reason why we shouldn't go below 1,000 again. In Bitcoin, there's no reason why Bitcoin should have any price at all. Really. But hey, that's just me again. But anyway, this fourth wave pattern, I haven't developed this any. I'll actually do that next week for you guys. I will expand this fourth wave pattern. It looks to me like it's a 3-wave correction, and this was very interesting to me. This move here was on the, when was that? On the first, it would have to be as well when you look at the date. 4 a.m. on the 2nd of April. Someone was having an April Fool's joke there. But the price moved up by, $900 or something within a half an hour, from 41.50 up to 51.25, so $920 or something within the space of an hour. And then we've obviously then the crowd tried to chase that move, and all we've done is kind of drift off those previous highs. Obviously, whoever bought in there sold out very quickly, and the crowd came in and willingly bought off him or her, whoever it was. Smart dude anyway, smart girl. So I think we've got a 3-wave pattern, and I think we should probably be closing out here on this fourth wave. And I do not think we will get a break of that 59.90 level again. We should start to see a decline into a fifth wave now pretty soon. And at the very least, break out below that 3,000 level again. Okay, so either way, we will start wave 5 of wave C. And of course, everybody will hate Bitcoin down there again. And that's when you should start looking at it, I think, in my mind. Okay, that's it for the week. Have a great weekend. Easter weekend here. Trading should begin again on Monday, and unless the world falls apart between now and then. We shall see you Monday evening again, and have a good Easter weekend. And yeah, I'm glad to see the website is back up and running again, and we can resume normal service. Okay, God bless. Bye-bye.